Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 5th, 2025, and we're diving into Targa Resources' latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Targa Resources has just released their third quarter 2025 results, and there's a lot to unpack, from record earnings to strategic growth initiatives.
Revenue and profitability overview. Let's start with the financial highlights. Targa Resources reported a net income of $478.4 million for the third quarter of 2025, up from $387.4 million in the same quarter last year. John, what are the key drivers behind this growth?
The increase in net income is primarily driven by a 19% year-over-year rise in adjusted EBITDA, reaching a record $1.3 billion. This was supported by higher volumes in their gathering and processing and logistics and transportation segments, as well as increased commodity sales.
And how did their total revenues perform?
Total revenues for the quarter were $4.15 billion, marking an 8% increase from the previous year. This growth was fueled by higher natural gas prices and increased NGL volumes, despite some offset from lower NGL prices.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.33 for Targa Resources, based on a survey of 7 analysts. How did the actual results compare?
Targa Resources met the expectations with an adjusted EPS of $2.23. This alignment with forecasts reflects the company's strong operational performance and effective cost management strategies.
Meeting the EPS forecast is always a positive sign. What does this indicate about the company's financial health?
It indicates stability and reliability in Targa's financial operations, suggesting that the company is effectively managing its resources and executing its strategic plans as anticipated by the market.
Strategic initiatives and growth projects. Moving on to strategic initiatives, Targa has been quite active. Can you tell us about their recent projects and future plans?
Absolutely. Targa commenced operations at the new Bull Moose II plant in the Permian, Delaware, which has a capacity of 275 mmsec/d. They've also announced the construction of the Speedway NGL pipeline and a new gas plant in New Mexico, all aimed at enhancing their infrastructure and capacity.
And there's news on dividends as well.
Yes, Targa plans to recommend a 25% increase in their annual common dividend for 2026, raising it to $5 per share. This reflects their confidence in sustained cash flow and growth prospects.
Operational efficiencies and future outlook. John, let's discuss Targa's operational efficiencies and their outlook for the future.
Targa achieved record volumes in the Permian, which significantly contributed to their operational success. They estimate their full-year adjusted EBITDA to be at the top end of the $4.65 billion to $4.85 billion range, indicating strong performance expectations.
And what about their capital allocation strategies?
They repurchased approximately $156 million of common stock in the third quarter, demonstrating a commitment to returning value to shareholders. With $1.4 billion remaining under their repurchase program, they are well-positioned to continue this strategy.
Key takeaways. In summary, Targa Resources has delivered a robust third quarter with record earnings and strategic growth initiatives. Their performance aligns with market expectations, and their future outlook remains strong with planned dividend increases and ongoing share repurchases.
Indeed, Targa's strategic investments and operational efficiencies are setting a solid foundation for future growth. Investors should keep an eye on their upcoming projects and dividend policies.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Targa's performance in the comments below.